The U.S. market's never had such a long up period, 14 years now. So historically, we must be coming to the end, but that doesn't mean it has to ever end. Maybe it'll go on another 14 years. In my view, there are signs that we're coming towards the end. I'm not selling short yet, but I can see, we have a lot of new people coming into the market. They call their friends and they say, I've discovered this new thing called the stock market, and you can make money. And it's easy. It's easy to make money. And everybody's very excited. Some stocks go up every day. I've seen all of this before. These are signs that we're getting towards the end. It's not the end yet, but we're getting there. I know we're going to have a recession. We've always had recessions. I know we will have another recession. If that's what you mean by expecting recession, yes, I'm sorry. Yes, I do expect a recession. I always expect a recession. We've always had them. I am not very good at market timing. I never have been. So I have no idea when it's going to come. But I do know we're going to continue to have recessions until the end of time. This is not my first rodeo. I've seen some of the signs. I see some of the signs that are familiar, that have occurred before in the past, before there's a recession. I think I see those signs happening again. But as I said before, I'm not selling short yet because I know that hysteria usually gets worse and worse and worse before the markets really give up. The Fed has always been, it's only been around 100 years or so, but the Fed has always had a big influence on the American stock markets. That central banks everywhere have had a big influence, and the Fed certainly does. They're not the only thing, but they do have a big influence. I mean, if they print a lot of money and spend a lot of money, it has an effect. I mean, if you give me a few $1 trillion, I'll show you a very good time. And that's what the Fed does. When they feel that they should, they print a lot of money and spend a lot of money. I didn't say it was good for the world. It's good for them, they think, but it's not good for the world. Chinese economy, from what I read and what I gather, is not doing extremely well right now because they did have a real estate bubble, a huge multi-year real estate bubble. It has finally popped. Beijing tried to calm it down for a long time unsuccessfully, but something has made this real estate bubble pop. And it was so huge. And whenever a big real estate bubble pops, it's huge. It takes a while, no matter who the country is. I'm not picking on China now. It takes a while for the economy to get over the effect, and that's happening in China right now. But they also had a very big wave of the virus, the COVID virus, and they were closed down for a while. So that's having a big effect, carryover effect. So there are many things affecting China right now. But in the end, I know that the Chinese economy will recover someday, and someday we'll all be making a lot of money in Chinese stocks again. Maybe not for a while, but it'll come back. Commodities are the cheapest asset, partly because of what's happening in China. If China's down and copper's down, whether it's because of China or whatever, copper's still down, and copper and other commodities are cheap assets for whatever reason. Maybe it's totally independent of China. Commodity prices, Apple is making all-time highs. The American stock market is near its all-time high. Sugar is down 50% from its all-time high. Silver is down 50% from its all-time. These are not bubble numbers when things are down 50% from their all-time high. China is trying to revitalize its economy. I hope they can do it. But as I said before, it was a gigantic property bubble in China, and no matter what the country, historically, when a huge property bubble pops, it usually takes a long time for it to recover, for the country to recover. In the late 20s, we had a huge property bubble in the U.S. that popped, that helped lead to the 1929 stock market collapse and the Great Depression. This is not the first time the world has suffered from the collapse of a property bubble. I do know that we've always had bubbles, and we always will. And that when big bubbles pop, they have effects. These are historic facts. These are not an opinion. You just look it up. The Chinese property bubble that's popped, combined with a huge virus, a huge epidemic, has to have an effect. And some of China's customers are slowing down. I mean, America's not buying as much as it used to. Nobody is. That has to have an effect. But the U.S. has not raised, they've raised interest rates a lot from where they were, but historically, they're not up a lot. 5% is not a gigantic interest rate in the U.S. In 1970s, we had a big inflation problem. The interest rate on short-term treasury bills, government treasury bills, was 21%. That's not a typo. 21%. Interest rates now are 5 or 6%. I don't know how high they're going to go before this is over, but I know that we've printed staggering amounts of money. And by the way, in 1980, the U.S. was a creditor nation still. Now the U.S. is the largest debtor nation in the history of the world. So I would suspect that before this is over, interest rates will be much higher. Markets go like this. They go up, they go down, they go up, they go down, but they don't go straight up or straight down. So what's happening now in the U.S., in my view, is just a normal market. Things are correcting. Inflation's correcting. The Fed, they're not very smart people. They're all academics and bureaucrats. They think that they've solved that they did it, that they've solved the problem, and things are okay. But when inflation comes back, when we have a rise again, they will panic and raise interest rates again. These are bureaucrats and academics. These are not smart people. That's why they work for the government. The U.S. dollar is the world's major currency, the world's international medium of exchange for many, many reasons. It has been for a few decades. It's probably coming to an end. Nothing has lasted more than 100, 150 years. We've had many international currencies throughout history, and the U.S. dollar is probably starting to come to the end. Not this month, don't worry, not this month, but it was very strong for a long time. I own a lot of U.S. dollars. I can see that it's going to have problems. I don't know what's going to compete with the U.S. dollar. I don't know what's going to replace the U.S. dollar. If you know, please don't announce it. Send me an email because I want to buy it myself. And I don't see anything on the horizon. You would think that the Chinese renminbi would be the currency, but it's still a blocked currency. So you cannot have an international currency that's blocked. So I don't know what's going to compete with the dollar in the future. I look every day, I assure you. The history shows people periodically have tried metal-backed currencies. The U.S. was founded on a currency that was backed by silver, and for 100 years or so, it was basically a silver-based economy. If you go to parts of the Middle East, they still have much more confidence in silver than they do in other metals. So this is not a new thing that the world has tried something, a real asset to back a currency. Maybe we will try again, but the problem with gold or silver-backed currencies is they're problems, and they never last because they're problems. The main problem is when things get tough, because gold causes discipline to politicians. Well, politicians don't like discipline, so they change the rules, and it's easy to change the rules, and that's why gold has never really been a successful long-term backer of currencies. Nothing has been.
As you know, we had a big problem in 2008 or so, and then central banks and governments around the world started printing and spending and borrowing money like never in recorded history. So if you give me a few $1 trillion, I'll show you a very good time. I mean, the world economy has been flooded with money and spending since then. America has never gone so deeply in debt so fast as we have done in the last decade, more than a decade now, 13 years. So yes, we're all floating on a bit of artificial stimulation. It always comes to an end, no matter how much you pump into the economy. It seems to be coming to an end. Inflation is coming back, which leads to higher interest rates. And some people are starting to say, wait a minute, this is too much debt. This is absurd. Not everybody. I mean, the Japanese are still doing it. Yeah. But some people are starting to question how much more we can do. So I'm not sure if the world has come to an end yet, but I do know it's going to come to an end eventually in the form of another bear market. And you remember 2008, we had a big problem because of too much debt. Look out the window. Since 2009, 2009, the debt everywhere has skyrocketed. The world has never seen anything like this accumulation of increase in debt. So the next bear market has to be the worst in my lifetime. I mean, it's simple arithmetic. The debt has skyrocketed everywhere. It's going to lead to a problem someday, and maybe today is someday. The people in the Federal Reserve are not very smart people. You know, they're academics and bureaucrats. They mainly want to keep their job. What they will do at the first sign of some good news, and it may already be here, they will start talking about and even acting on slowing down. It sounds like they're going to slow down for a while because they think things are better, and they may be, at least on paper. But eventually, they're going to print money till we run out of trees.
Okay.
That's what all they know. If there start to be a lot of bankruptcies or even a few bankruptcies, they will get phone calls from people saying, you must save us. This is a matter of Western civilization. You must save us. They will panic and they will print more money. I don't think that in the history of the world, many central banks have said, too bad, guys. It's time for a lot of bankruptcies. Go down the tubes. That's not the way bureaucrats think. That's not the way academics think. And the end result will be not good for you and me, but it might temporarily save their jobs. Let's go back to the last time something like this happened, which was the 1970s. Inflation kept getting worse and worse, and the central bankers made it worse and worse. But then the president, it was Jimmy Carter at the time, said to Paul Volcker, who he was going to appoint as head of the Federal Reserve. Volcker was a bureaucrat, but Volcker understood the situation. And Carter said to Volcker, you do whatever you have to do, and I will support you. Now, Volcker didn't believe him at first, but Carter reassured him that he could do anything he had to do. And in the end, of course, Carter lost the election because Volcker did what he had to do. Volcker knew what had to happen. I mean, this will shock some people, but interest rates on Treasury bills, short-term U.S. government Treasury bills went to over 21%.
My goodness.
That's not a typo. 21% on Treasury bills because Volcker tightened and tightened and tightened. And Carter said, okay. Carter said, okay. Well, it caused bad times, but it killed inflation. Carter lost the election, but it did kill inflation. I don't think that there's a politician in the land today who would do that or support that. And I'm not sure that many bureaucrats. I don't see this guy we have now as another Paul Volcker. And again, you know, in Japan, the head of the central bank has said, I will print his word, unlimited amounts of money. And he's doing it. And the Japanese politicians say, do it, do it, do it. I mean, unlimited. It's unbelievable how much money that guy prints. But so he is certainly not a Paul Volcker. I don't think we have a Paul Volcker in the U.S., and eventually they will cave in. Most reactive, the things that react first are things like mortgages, because it hits a potential home buyer that day. He says, oh, gosh, look how much my monthly payments will go up if I have to take a mortgage, a floating rate mortgage. They're very hard. It's hard to get fixed rate mortgages these days. So they get hit first, but then it seeps through to everybody else. Bondholders start losing money and they start feeling some kind of pain. And eventually, all of us, eventually it's on the evening news. By the time it's the evening news, it's usually pretty much the end. But, no, we all suffer. You said interest rates are high. Well, they're higher than they were a year ago. But I want to hearken back to 21% Treasury bills, which have happened and can happen again. In the late 1970s, America as a nation was still a creditor nation. We had debts, but it was on balance, we were still a creditor nation, which we remained until the mid-'80s. So there are many different things now, as far as we are concerned, we being the United States. And our situation is much, much worse. And these guys in Washington are making it very much worse every day. Not every month, every day. They're making it worse. We have periodically had recessions since the beginning of time all over the world. It always has been. I presume it always will be. But Janet Yellen said, who's the Secretary of the Treasury, said, no, we have figured it all out. Don't worry. We have it under control. Well, she's got degrees from a couple of fancy Ivy League schools. school. So if you believe her, then don't worry, Washington's sorted all this out now. I happen to know she's wrong, and I happen to know that we will have recessions again in the world, and the next one has to be very bad. But as I explained, 2008 was a nightmare for many of us, for many people. Since then, the debt has gone up by astonishing amounts. You cited some numbers before. Pick any numbers you want. They're terrifying, and it's continuing to get worse every day. So the next time we have a problem, I mean, Adam, it's just simple addition. Look out the window. The debt is skyrocketing everywhere. So the next problem has to be very, very bad. It'll be the worst in my lifetime. And I'm older than you, so it'll be the worst in your lifetime too. I didn't say it'd be the worst in the world, the worst in history, or anything like that. I just said in my lifetime. These interest rates in the United States in 2022, by historic standards, are not high. They're higher than they were a year ago. But look back at the history of America, the history of any country, but since we're Americans, these are not high interest rates in American history. So they have the scope and the historic precedent to go much, much higher, which I suspect they will, for the reasons that we've discussed. And that will have a dramatic effect on housing. We have had a huge amount of home building in the last decade or so. I don't have the numbers at hand, but I know everybody has been building houses. Some would call that a bubble, but even if it's not a bubble, it has certainly been a boom. And when that comes to an end, if your house goes down in price, it doesn't affect you too badly unless you have to sell or something. But then when your neighbors' houses start going down and your relatives' houses start going down, then you really feel the pressure, because if I have to sell or whatever wealth I thought I had, I don't have anymore. And then people everywhere start talking about it, because, one of the things that many people talk about are property prices, house prices. And if they start going down, it's going to be high on their list of things to talk about, much higher than the football game. If everybody's house price is going down, everybody's going to talk about it and moan and complain, which leads to more pessimism. I'm not trying to scare people. I'm just telling you how the world has always worked.
Yep.
This is the way the world has always worked, just as from the Old Testament they had 7 good years and 7 bad years. I mean, this has been going on a long, long, long time. So don't listen to me. Just read some history, do your own research, and then you will get knowledgeable. And if you get knowledgeable, you will get worried, because you will see this has happened many times before, and it's going to happen again, as it always has. And those who are prepared and knowledgeable will do well and survive. Some people came out of the 30s very rich. So if you're prepared, you'll do fine.